Welcome to the Swing Trading with Cycles channel. We're going to do our update on oil today. Just a quick reminder, this is all about data-driven analysis. We focus on price action. We use multiple time frames so that we can anticipate moves, and we use cycles to tie it all together. So what are we going to review today? So the crucial question we're trying to answer today is how will the 3-year cycle decline unfold for crude oil? And that's going to move us into 2023 because since we're obviously closing out 2022 here. And the thesis here is that we already topped in the 3-year cycle. That happened in March, right? And so we're going to do 5 things today. We're going to look at the daily chart review. We're going to do a weekly chart review. We're going to do a monthly chart review. And we'll obviously talk about how cycles look in that context. And then we'll do some hypothetical scenarios leading into the cycle low, right? So like how would certain daily cycles unfold if they were certain lengths? Do that for the weekly, do that for not for the monthly chart because we kind of have a good sense of that, and we'll talk about that. And then we'll just do a quick check-in on crude oil stocks. So let's hop into it. So, and we're using WTI here, West Texas Intermediate. So this is your daily chart, and I talked about this on Twitter. Oh, this is November 26th, by the way, Saturday night. And so I talked about this on Twitter that this could have been our daily cycle low in real time, right? Day 40 of the daily cycle. Now it looks like it's going to fail. Right, that low is $75.30, so that's the level we would look to be broken. And in terms of this daily cycle, you can see we had this rally here, and then this kind of pullback chop zone got back to this high and then collapsed again. So this is your classic double top. That gives us a high on day 30. So it's technically, a relatively late high, so that's technically bullish. But obviously, this whole period was really kind of just trying to get back to this high, which was made relatively early. So theoretically at this point, we expect a low below 75.30. But more importantly, it's the weekly cycle that's in decline. So, we'll hop over to the weekly. So we know the daily cycle is still moving lower. And the weekly cycle topped out on week 6, which is here, the week of November 7th. Last week was week 8, so we're going to be starting week 9 on Monday, right? And this is and I've drawn this in the previous videos. Definitely take a look at the links in the description to take a look at those videos for context. But you imagine we get a move lower, then we get some kind of bounce, right? We're going to get some kind of little rally. That's how it works. Price does not move in one direction. It can't, right? Or I should say it does for a little while, but then it has to retrace in the other direction. Right, and so we get a little lower high and then another, did not mean to do that. And then we get another lower low and then another lower high and so on, right? And we'll talk about some projections for like, okay, when could the weekly cycle bottom, for instance? This is week 8. The last one bottomed on week 24, right? The one before that, week 19. The one before that, week 15. These can be a little bit all over the place, so a little bit dubious. And lastly, we look at the monthly chart. And for this one, we think about the context of the 3-year cycle. So you call that 36 months in a perfect world. They're never actually 36 months. Sometimes they are, but you're not going to expect it to be exactly 36 on the dot. Just call that like a ballpark. Most importantly, we focus on the price action. This is the March candle, this big upper wick that we have here. And that became a swing high below 93.56, right? And so since we've been below that level, we have been a swing high below March. So we have been declining this whole time. Now, notice right after March, April, May, June, we actually had a rally, right? This in real time looked like we were, okay, wait, maybe we're going back to all-time highs, right? Or not all-time highs, but at least above this local high. But then we collapsed again, right? And the plot thickens. I mean, this monthly candle is very telling. Okay, so as you look at this monthly chart, you have these 4 straight months of downside, starting with June, right? And then you have this lower high, green month, and then you have this month, and that was October to be clear. And then you have this month, November. And always, as I always say, an upper wick is a pullback on a lower time frame, right? So that's not good when a green candle closes with an upper wick. Always not a good sign. In this case, this was a green candle that turned red, again for November. And you can see a pattern that is very common. It's less common on higher time frames, but very common on lower time frames. It's just important to know about on all time frames is the bearish outside candle, or the outside candle in general. and it's a candle that makes a higher high and a higher low compared to the previous candle, right? In this case, we almost made a higher high. Well, let's see. So the high for November was 93.73. Actually, we did, right? So it's kind of hard to see visually. But the high for October was 93.62, and the high for November was 93.73. So we made a higher high by 10 cents, and then we failed on the other side. So once we did that, we had an inkling that generally that when you have a candle that goes from green, it makes a higher high, and so it's green. It has to be to make a higher high, right? And then it fails and starts to go red. The presumption is there's a very good chance it's going to make a lower low as well, and that's what this did. And that's below 79.67, and we're obviously below that. And we talked about this in previous videos. Again, definitely take a look at the links in the description. Now that we've already taken out that low, though, it wouldn't be surprising to have us bounce here. And we'll talk about this when we go back to the weekly and we look at some of the scenarios. You can also see we've kind of hit this pivot here, which we talked about again in the previous videos. Like that was just an obvious pivot. So wouldn't be surprised to see us bounce a little bit. But it does look like we want to do work with like the $60 area, the mid 60s. And again, this is a bearish outside candle generally, involves further downside. So you might expect, like a December candle that's something like that, right? Especially thinking about where we're likely to close, it just puts pressure for the next candle to open kind of to the downside. And so that's your picture for we looked at the daily, we looked at the weekly, and we looked at the monthly finally. And just thinking about the 3-year cycle, I'll just say again, this is month 23. So this is month, or I should say that's month 23, 24, 25, 26, 27, 28, 29, 30, 31. So this is month 31, November is. And so if it's going to be exactly 36 months, which it usually isn't, we have another 5 months of downside, right? So December would be month 32, and then I've marked it here, potentially let's call it March of 2023, right? Which you would think would be in below $60, right? Like you would think we would take out this pivot with like this kind of fictional candle created to give you a kind of a visual sense. So if you think about where cycles might lead us, right? Let's look at the daily first. So these cycles are pretty erratic. So like it's not like a Bitcoin low. Well, you expect it to be around 60 days or whatever it is, right? So the other thing I would call out here is that like that's how it's like we get these little bounces, right? Like this bounce lasted 9 days, right? This little bounce lasted 5 days. You have these other little bounces, right? So at some point we're going to get one of these bounces, right? It's going to be a question. We'll see if it lasts 3 days or 5 days or 7 or 9 days, but we're going to get a little bounce that's more than like something like this. So you want to be prepared for that. That's probably going to be your daily cycle low, right? Maybe we undercut this low. So, right, like let's just draw a scenario, right? So like maybe we like undercut this low and then we bounce a little bit, right? Only to come back and kind of make, and that's obviously very poorly drawn, but like I'll like only to, let's say like we do something like that, and then right, like something like that, and then we bounce up, and then we come down, make a lower low, right? Something like that. And this is not some kind of prediction. It's just, you can imagine we come down and then finally we get a daily cycle low. Maybe it's so if this is day 40, then this is day 41, 42, 43, 44. So who knows? Maybe we get something on like day 50, right? One thing that we know is like early December. So, right. So like early December are some important like milestones, if you will, right? So let's just draw this back and let's get to like early December. Let's call it like the first week of. Let's call it December 7th, right? That would be a 52-day cycle, which is, so right. And again, this like capitulation potential low is on day 40, right? So maybe it's like something like that, right? Then we get a little rally that fakes people out. Maybe we do a little bit of like choppiness, and then we make a lower low. This is typically how these things play out, kind of, sort of. But what would that mean, right? So like, let's say we get that daily cycle low on day 50, right? So like, let's say we get that on the 7th. And again, this is just like, we're in the hypothetical zone now. And then let's say we get another daily cycle that, like, let's just, you know, throw a number out there, say it's 30 days, right? That takes us into January 17th, and then we get another 30-day one, right? And that gets us into like the late Februarys, right? So you can see maybe we have 2 more daily cycles after this one before falling into the 3-year cycle low. And if we think about what that means for the weekly, let's just say hypothetically that this weekly cycle is going to be 20 weeks, right? That's just a really broad number because they can be kind of all over the place. That's actually February 13th, so that's interesting, right? So that's suggesting to me that maybe this weekly cycle is the one that actually takes you into the 3-year cycle low. So that's interesting, right? Because if we went to, like, let's say the week of November 13th, that would be a 24-week cycle, just like the weekly cycle that we just went through here. Which, if you just think about that, we just went through those daily cycle scenarios where we get a daily cycle low here, and then we get 2 more daily cycles. So we would get 2 more daily cycles within this daily cycle decline potentially. That's really interesting. So that means a lot of potential kind of sort of fake outs, right? That's really interesting. But of course, this is all hypothetical. We could get like a really early cycle, let's say January, mid-January, and then we have another weekly cycle that starts, that goes about 20 weeks, and that takes us into May, right? Now that's obviously a lot longer than the daily cycle scenario we talked about, and maybe that just means that we get another daily cycle out of this, right? Like, potentially, right? So, like, that's interesting, right? That gets us into, like, yeah, so like maybe that other daily cycle is a little bit longer, takes us into May. So that's really interesting. And the monthly, we obviously don't model out quite as much because we know we're in month 31. We could go another 5 months before the daily cycle, the 3-year cycle, and it wouldn't even be a big thing. And so those are just a few kind of scenarios, and I'll keep folks up to date on Twitter. If you're not following, definitely take a look at the links in the description to see how things are kind of playing out. And just really quickly to close things out, we'll look at how, you know, crude oil is doing compared to crude oil related stocks, right? So this upper left hand corner is the WTI crude. This is on a linear scale, right? This is XLE, actually also on a linear scale. These others are on log, but I'll put this on log. I'll put XLE. I have this on linear because of the crazy like move down to low, like zero. But what you can notice here is this is these are annual charts, which is to say each candle is a full year of price action. You can see this is a 2022 candle, an incredibly bearish candle for oil itself, right? Really bearish. This next on the right is XLE. Directly below crude oil itself is XOP. That's the exploration names. So definitely much more speculative, and you can see it's much further off its high. Its all-time high is 336. It's right now at 154, whereas XLE's all-time high is 101, and it's down here at 91. So it's another like 11-12% of upside. And then you have OIH, which are the oil services names like Halliburton. What's the other big one? Schlumberger. Those folks. And that's like way off its high of 1,500. It's down here at $300. The point here is you can see all of them are very big green yearly candles, which obviously aren't going to change much because we only have 1 year left of price action. Whereas this one is just, my God, all of that has gotten cleaned out. And we talk about this in previous videos. At some point, the chickens are going to come home to roost. This chart is going to reflect the bearishness of oil. The same way that we had this big swing high in 2008. This thing had a big swing high 2008. This thing had a big swing high 2008. Let me guess. Yes, this thing also had a big swing high 2008. The point is, at some point, if we do get the recession everyone is calling for, that, you know, the huge earnings revision estimates, these things are going to fall off a cliff as well. But for right now, they are massively outperforming. These are huge chart patterns that are breaking out right now. But that's why it's important to understand price action. Make sure you can spot a reversal. What does a swing high look like on different time frames? And if we zoom down just really quickly and look at, let's say, monthly charts, again, we just looked at oil, very bearish. Looks like it's, seeking out new lows. XLE is just consolidating at the top end of the range. Same thing for OIH, although it's red now. And again, same thing for XOP. So all we can really do is continue to watch. But for right now, the oil related names are still strong, while oil is showing incredible weakness. And for good reason, it's probably sniffing out, potential like just weaker demand. Whereas these stocks are still being propped up because they have cash flow, especially XLE, where you have names like Exxon, etc., where they just, and that's why that's the strongest. It's the closest near its all-time highs. It's not surprising. They have huge cash flow, great dividends. No one thinks they're going to be in any kind of economic trouble per se. And so they will be the last dominoes to fall, theoretically. So we'll leave it at that. That's our crude oil update for, again, November 26th. Thank you for watching.